Welcome. This is Tommy Ruke with the Motor Carriers Insurance Education Foundation, the TRS Educational CE program. This is part 3 of a 4-part program addressing business auto coverages. Let's get started. If you have any questions, please type them in the chat window. They will be answered as time allows, or later we will respond to you and carbon copy everybody through an email. If you have some problems with the audio, can't hear us, then also please type in the chat window you're having those problems, and or call our office at 800-741-4084, and we will attempt to correct any problems. Quick review, session 1. We talked about how to set the policy up, defining who the policy will consider a U and what will be considered a covered auto later. The U was the legal entities that we list on item 1 of the deck. We need to list all operating entities, but only the operating entities. There's no need to list the owners of legal entities. And if your insured is an individual, or if you list an individual on the named insured line, then that creates a problem as we set up the symbols in a minute, because that is the worst insured, because you might be bringing some of their personal auto exposures, both owned autos and or hired autos, into the coverage provided under the business auto coverage form. The second area to make sure the policy responds as we set it up is to make sure the covered auto symbol is selected and is properly told the insured. Obviously, any auto is the best for the insured. It covers any auto exposure the insured has. It matches the work comp and GL exposures, coverages that we find in other coverage forms. However, it is a problem because sometimes insurance carriers do not want to give that coverage and cover autos they don't know about, which any autos would have them do, or if there's a problem, maybe collecting the audit if they add vehicles to the operations that we might not be. So a lot of times you write the policy with a symbol that is symbol 7 specified. To be a covered auto, if it's specified, then it must be listed on the policy. So you limit the coverage for covered autos only to the autos that are listed on the policy. Must have the autos listed, or there's no coverage, unless it's a newly acquired temporary substitute, hired and not owned. If this is not done properly, then you would have to not have coverage. You would have symbols for hired, not owned. That would be symbol 7, 8, and 9 added to symbol 7 if you wanted to provide coverage, or your insured has exposures and you want to provide coverage for those exposures. Autos that the insured hires, lease, rents, or borrows, or autos that are used that are owned by others, used on your insured's behalf in their business. It must be set up properly, or there could be no coverage at time of accident. The second session review is the liability coverage. We saw in the insurance agreement we pay for direct damage and pollution coverage. We pay in the first insurance paragraph bodily injury, property damage. The second one, we cover the exposure for covered pollution cost or expense. This is pollution coverage. As we found out, both for direct damage, BI and PD, and covered pollution cost and expense, there is no coverage if the pollution is caused by the insured cargo. There was an endorsement, say 9948, that brought that back into the coverage. In the specialty areas of truck riders, that endorsement is available often in the marketplace and sometimes even included in pricing. For the typical business auto risk, that is not as typical, and most times it has to be asked for by you, the agent, or the provider of coverage. We also looked at who's insured in the second session. You is the legal entities named on the deck sheet, all the legal entities, but only for a covered auto. We also extended coverage to permissive users as long as it has the use permission, and again, it's a covered auto. There's also coverage for customers and owners of the legal entities. That's that vicarious wording. Anyone liable for the conduct of insured above, but only for the liability of those listed above. That's the vicarious. That's wording. That is exposure, excuse me. That is blanket additional insured. But the owners of the covered autos are not covered. The insured is covered. permissive users covered but not the owner. And we talked about these endorsements to cover the owner. CA 2048 is a designated insured endorsement that gives absolutely no additional coverage or nor status. It's just to satisfy your insurance customers. CA 9948, that is employee as lessor. That is if the vehicle is owned personally by the owners of the corporation, LLC, or partnership. You would add this endorsement to cover the owner. CA 201 is to cover long-term finance leasing companies. That is the additional insured lessor and loss payee. That form has a cancellation provision in it that we need to be aware of. CA 9916 is an endorsement that we use in the commercial auto arena, trucking arena, motor carriers arena to add owner-operators vehicles to the policy. That's hired cars specified as owned autos. CA 9948, CA 201, CA 9916 all change the non-owned autos to a owned auto for policy status, which makes the coverage primary, and it covers the owners of those vehicles for the liability of owning the vehicle. CA 996, CA 9933 is employee as lessor. This does not change the status. It is still a non-owned auto. However, if the policy provides coverage for non-owned autos and the employee is using their personal autos on behalf of the business and gets named in the suit because of the master-servant relationship, we will have coverage on our commercial auto policy for that employee using their personal auto on the business of the insured, but it will be in excess of their policy, not on a primary basis. That's the review. Let's now talk about where we're going today. Protection for the insured. Protection for the insured arises out of their auto exposure is addressed by the use of the auto coverage form. Because if insured gets sued, do they expect their insurance policy and agent provide them protection for these suits? Absolutely. First off, they want defense, somebody to defend their actions, and second, somebody to pay for the damages that they could have done. The triggering of coverage must always be done correctly to make sure that this achieves. That's what we set up a few minutes ago as we talked about. However, the auto policy will respond if the insured applies. It applies if it's not excluded. So today we're going to spend time on the policies of where coverage is taken away. So in the insurance agreements that we talked about in the last section, we're covering the insured for bodily injury, property damage, and exposures for covered pollution, cost, and expense. Now let's see where we take coverage away. I group the exclusions in 4 basic areas. Things that should not be covered: expected intentional acts, pollution, war, and racing. We also use the exclusions actually to define coverage, and particularly to define coverage and coordinate it between other coverage forms, mainly the general liability coverage form. Obviously, the auto liability and the general liability are the 2 coverage forms that address the business of our insurance liability exposures. And lastly, we tell them to buy another policy to cover the work comp exposures and property and insurance care custody control. So let's look at each one of these as we go through. The first exclusion we're going to look at is expected or intended injuries. The policy excludes bodily injury or property damage expected or intended from the standpoint of the insured. Well, what does that mean? Well, actually one day I got a call from one of my clients a number of years ago who called me up and said, "Tommy, you know that monument in my going into my housing location that is kind of ugly?" He said, "Last night I kind of got mad at it and I ran over it." Well, there's no coverage for that. Clearly, a lot of times your insureds would not ever want to use an auto and expect it or intended. There is a gray area though, and we actually had this exposure one time for, again, one of my clients who was a beer distributor where they were delivering beer in Fort Myers Beach. And in Fort Myers Beach one time, with their gate over, delivering the beer at a restaurant, a person walked by and took a case of beer off of the truck and ran away with it. And our driver got the case back. Getting the case back and how he got the case back inflicted some perceived injuries on the person who took the case. That person then sued our insured. That is not an auto claim. That's bodily injury property damage expected or intended from the standpoint of the insured. The GL policy has a buyback, though, that says, however, if the action is to protect person or property, we cover it under GL. So the auto policy, if the vehicle is used to run somebody down or to intentionally hurt somebody, there's no coverage in the auto policy. If it is to protect the property, that would be a GL exposure. The second exclusion is contractual, and here is where it gets kind of funky. We exclude contractual bodily injury property damage arising out of a contract. But this exclusion does not apply if it is an insured contract. And so we have this, we have to look at, and we will in a minute, the definition of insured contracts. Because what we'll find is it's pretty broad coverage. So the definition of insured contracts start with what we define as the miscellaneous contracts. Lease of premises, which would not have much relevance in the auto arena. Sidetrack agreements, this is with the railroad for the use of their sidetracks. An assessment or license agreement except in connection with construction or demolition of a railroad, that's railroad protective, that's not covered, or any obligation or required ordinance to indemnify a municipality. Those are the miscellaneous contracts. The insured contract 5, now again, we're talking about giving insurance protection when the insured signs a hold harmless or indemnification agreement. This is what we're talking about here, where the insured holds someone else harmless or agrees to indemnify them in a contract. H5 is that part of other contracts or agreements pertaining to your business. That is a key part. Any other contract or agreement pertaining to your business, including one involving a municipality in connection with work performed in the municipality, under which you assume the tort, that's the negligent liability of another, for payment for bodily injury property damage to someone else. Tort liability means the liability that would be imposed by law in absence of any contract or agreement. Let's step back for a minute. For you who are part of the second session, when we talked about additional insured, we find that the policy builds into it, and the designated insured endorsement says we will cover the quote additional insured unquote, but only for their vicarious liability, only when they're being held liable in whole or part from the actions of our insureds. So that doesn't cover them for their negligence, but for being held vicariously liable for the negligence of our insureds. In this case, our insured can assume liability on behalf of the customer and hold that person harmless and agree to indemnify them, and that will be an insured contract. I have said often in presentations, and a lot of people do not understand this, is that there's far more exposure under contractual obligations than they are under adding someone as additional insured because of that thing. There is some things in the marketplace where, yes, there is coverage for the person for that whole harmless agreement and an indemnification agreement, but sometimes they are not enforceable under law. There's two examples. Those are called anti-indemnification agreements. Most states have one addressing a subcontractor holding a general contractor harmless. That is against public policy. They cannot require it will not allow a subcontractor to hold a general contractor harmless for the general contractor's negligence. And there's also numbers of states, I think only 4 or 5, that do not have an anti-indemnification agreement, where a shipper cannot require a motor carrier to hold them harmless for the liability of the shipper. So it's still an insured contract, but in situations where the states have an anti-indemnification agreement, primarily involved in the construction arena and in the arena involving the motor carriers industry, where you have shippers and motor carriers, and construction where you have general and subcontractors, those agreements are not enforceable. However, by law, however, it is an insured contract. So that is fairly broad, these 5 here. They only take contracts away for these following: that part of any contract agreement pertaining to your business, pertaining to the rental of a lease by you or any of your employees. So when your insureds go out and you let them sign a lease agreement on a business trip from Hertz or Ryder to lease that vehicle, that lease agreement has an insured, has a whole harms agreement in favor of the leasing company. That is an insured contract. But the second part of this says, however, it is not an insured contract for the physical damage of the leased vehicle. So there is an exposure there in case the insured damaged the vehicle they leased. That buyback would be having hired car physical damage coverage, and we'll talk about that in the 4th hour to talk about how to provide coverage for vehicles insured do not own in their possession. Then there are 3 contracts that are not insured contracts. That identifies a railroad for bodily injury property damage. That's railroad protected. That pertains to loan, lease, or rental of autos by your employees. The auto is loaned, leased with a driver. That's where the motor carrier signs on an owner-operator leasing that vehicle. That's not an insured contract. And that holds a person or organization engaged in the business of transportation property by others for hire. That is where you have a motor carrier who allows someone else to use their authority. So in overcap, we exclude contractual except for insured contracts. And insured contracts, we cover broad form contractual. All contracts the insured signs that has to do with their business involving their auto exposure will be an insured contract except for 4 situations. The first situation is we will not honor the whole harms agreement and indemnification agreement in leasing vehicles without a driver for the damage to the vehicle. You buy that back by hired car physical damage. We do not honor the whole harms agreements contained in railroad construction. You buy that policy with a railroad protective policy that's a GL endorsement. We do not provide coverage for the loan, leased, rental vehicles with a driver. You take care of that by providing that insured. Again, that's a motor carrier with the motor carrier's form and have the right proper contract, or you add that vehicle in the policy and add endorsement 9916, which will then cover that agreement. And lastly, we do not honor the whole harms agreement involved in using of transportation authority from one motor carrier to the others. Again, that would be covered by the motor carrier's insurance, by the motor carrier's coverage form and the proper wording of the contract. So other than those 4 situations, we exclude contractual, but we give it all back except for those 4. So it's basically broad form contractual. So no coverage for BI&PD where the insurance does not apply. Does not apply if excluded. No coverage for expected or intended, knowledge of the insured. No coverage for liability assumed in the contract except for insured contracts. And in insured contracts, you have the 4 miscellaneous and you have the broad form. Any written or not tort liability only. Then you do not have the hold harmless agreement for the rental vehicle, and so there's no physical damage coverage for the rental vehicle. We talked about buying that back, and then that would clear up that employee leasing. And then you also have the contract that has to do with the motor carriers industry and railroad construction. Other than that, you have broad form contractual. Exclusion 3, work comp. Again, we do not cover any obligation of insured under a work comp liability. The work comp policy would cover the injuries to their employees and their work comp obligation. Exclusion 4 parallels the work comp. The first exclusion 3 is when work comp is in place, but even when work comp is not in place, we do not provide coverage for bodily injuries to an employee of the insured arising in the course of employment. And the concern that we have here is there's a number of states and there's a number of situations where the insureds can have employees not covered by work comp and not supposed to be, or let me rephrase that, not required to be covered by work comp. For example, in Florida, You do not have to have work comp coverage until you have more than 4 employees. So if you have an insured that's a business, a plumbing company or a construction company or a delivery company that has employees and they have less than 3 employees, those employees, the state of Florida does not require that insured to provide work comp coverage. Now, that worker rides in that vehicle, and let's take as a partnership. Let's say me and you are partners, and we decide not to cover ourselves by comp. So it would work on either way. I'm running the office. You are the field person. You tell me, Tommy, we got a truck here that I'm driving out here in the field making sales calls. It's got bad tires on it. We need to repair the tires. I tell you, we can't repair the tires. We don't have any money. Go ahead and use it. You have an accident. The question is, can you then sue? The answer to that question is yes. Even if you own a part of the company, even if you're a partner, you can sue the legal entity, which is a partnership. Now, when you sue that, then how would you get coverage? Whether you are my employee or my partner. In both cases, you would have no coverage under any policy because you do not have coverage under work comp and you do not have coverage under your auto policy and later in the general liability policy because you're still an employee. You're bare, which means that, in my opinion, everybody should have work comp and be covered by work comp except the owner of the company, 100% owner of the company. In the case of the partnership, we say, why would we want to do that? Well, you end up owning my half of the partnership. And probably more important than that is that you died and now I have to deal with your spouse, and she or he would clearly want to have the partnership, my half of the partnership. So that is, even though you do not have to have comp, even though comp's not required, and that employee gets hurt, and they sue, you still do not have coverage for that suit under the auto liability forms that we write. Be part of this. We also do not cover the spouse and child and brothers or sisters of the employees because for their suit, where the insured may be liable as an employer or not. Again, in any capacity, the employee exclusion applies to any obligation to share damages. Then the second part here, and this gets back to insured contracts, and this happens often. You're insured as an auto service repair shop. Your insured has an agreement with a local Budweiser dealership to come into this field or to come in every Saturday and work on their trucks, change the oil, grease them, change the tires, etc. To get on the premises of the beer company, you insured signs a contract that says we hold you harmless for injuries to anybody, including employees or workers that I take to your job site to accomplish the task that you have contracted with me to do. That worker of mine is on your yard, and one of the beer company's employees runs over my worker who's changing the tires with a forklift. The beer company is negligent in that case. Your employee would your insurance employee would collect work comp for that injury because it's a job-related injury, but they still would want more than work comp, so they sue the beer company. And the beer company says, whoa, Tom, hold up. Repair shop, you agreed to hold me harmless for injuries to your workers. They're now suing me. Honor your whole harmless indemnification agreement. And so by reading the exceptions to exclusion for injuries to employees, the exception says that this exclusion does not apply to domestic workers, which we're not dealing with here, or to liability assumed by the insured under an insured contract. So in this case, what has happened is that now your insured has 2 exposures. The first exposure is they're paying for the injuries to that worker under work comp. Now they're also addressing the injuries to that worker under their auto liability policy. And by the way, the general liability policy has the same wording in it. The example I gave you would be more general liability than it would be auto liability, but both of them have the same wording in it that would cover back under the contractual obligation that you would have. We also exclude fellow employees. This is where there's 2 employees in the same vehicle Well, you could say that on a business trip, your management tells you to have your fellow employee to drive. You're saying, well, you cannot drive, you had too much to drink, and the fellow employee says, yeah, but I rented a vehicle, I got the keys, I'm going to drive. You have an accident, you get hurt, you get mad at them, and you sue them. We're not going to cover that suit for the employee. Now we'll cover the job-related injury under work comp, and you're insured, the business cannot be sued because of the tort, but we do not cover that dispute between the two employees involved in the auto accident. So exclusions 3, 4, and 5, the simple answer to it is for the insured standpoint, you want to make sure they have work comp coverage in place. You do have to worry about the whole harmless and contractual agreement for the exceptions to exclusion 4. The definition of employee includes a lease worker, but not a temporary worker. So I've got questions a lot of times about, is there additional exposure if you're insured you're using professional employer organizations? And the answer to that question is no, because injuries to workers who are leased from an employee leasing organization, also, which is a lease worker, would not be covered under the auto liability or the general liability policies that we issue to our insureds. That's the definition of lease workers and temporary workers. Tell the insured to purchase another policy to cover the areas the VA does not. Work comp and other laws. No coverage in the business auto for employees' work-related injury. Work comp policy is needed to cover that exposure, to extend also tort immunity so that worker under the work comp law cannot sue your insureds under tort. Again, also, even if there's no work comp in place, the employee still is not covered except for the whole harmless agreement that we talked about. You could provide coverage for injured workers under endorsement CA 2325, but I would not recommend you doing that. The lease workers' injury should be covered under the work comp policy of the leasing company, and in all states that I'm aware of, tort immunity is extended to the users of these lease workers under the all the work comp laws of the states that I'm aware of. So tell the insured another policy, again, the fellow employee policy. You can modify this to cover the fellow employee that would cover that liability where one employee sues the other. I would not do it regular basis. I would clearly not do it using CA 20055 because that covers all of them. I might consider adding 2056, which would extend coverage to the officers and directors to name people. And this would come up, for example, in the way I gave you before, where you had 2 people on a trip and the management said that employee 1 had to drive the vehicle, and you tell the management, no, he's a bad driver or she's a bad driver, I don't want to ride with them, and the management says you have to. You get injured, so you sue the management. The management is an employee, so this would not cover them for that. And work comp might not extend toward immunity to them for that. We can add that coverage where the manager would be covered. There is coverage later, and we're going to do another series of 4 hours for general liability, and you'll see that that situation would be covered under the general liability policy. So giving it back under the auto policy would be something that might be considered. Exclusion 6. We do not cover property damage to or cover pollution costs or expense involving property owned or transported by the insured or in the insured's care, custody, control. But this does not exclude liability assumed under a sidetrack agreement. That is where you hold the railroad harmless for using their sidetrack, and they have box cars on the railroad sidetrack. That's a part of the insured contract. So we do not cover that property. There's then 2 areas. Why would your insured have property of others in the transportation arena that is in their care, custody, and control, or even their own property in that? And that's simply you write a cargo policy. If I'm a for-hire trucker or for-hire motor carrier, the purpose of my cargo policy is to buy back my care, custom, control exclusion in my auto form, because I might be held legally liable as a bailee for the property I am transporting. So the very simple use of a cargo policy is to buy back that care, custom, and control exclusion. The second part of it is I have hold on my own property. Again, we do not cover that on the auto because it's in my care, custom, control. It's no longer covered under my property policy because it's no longer within 100 feet of the premises, unless I have in my property policy an extension that modifies that does cover my property away from my premise. And there are a lot of extensions to property coverages that do that. But in either case, you need for own property, you need an extension on your commercial package policy with the property coverage to cover your insured's personal contents beyond 100 feet of premises, or you would need to cover a cargo policy, which would be the owner's policy that would cover their own property away from their premise, or cargo policy that is the legal liability form to buy back the legal liability exposure as a bailee. Lastly, if your insurers have vehicles of others in their possession, you would need a physical damage coverage to cover that vehicle, and that's hired car physical damage. Again, as we mentioned before, we will talk about that tomorrow. So just think about what the property insured has, sell them another policy like work comp for injuries to workers, sell them a cargo policy, or provide Symbol 8 coverage for hired car physical damage under comp and collision for the possessions of other autos in their possession that they're driving. If they're doing a repair work on them, you would also need garage keepers coverage, which we'll talk about in the last section, hour 4, and that's also an endorsement to this policy. Exclusions 7, 8, 9, and 10 have to do with how the policy relates to general liability and auto liability. Where the policy starts starts coverage of the auto form, the general liability policy excludes coverage. Where the general auto policy stops coverage, the general liability policy picks up coverage. The example that I like to use, and I did some work, as some of you know, in agriculture, where we have someone who is taking a show horse to a event, and as they stop at this event, they have the obligation to take this show horse to the barn. As they unload that show horse bolts and hurts somebody. The person that horse hurts sues your insured who owns the horse, who was unloading the horse. The question is that an auto policy or a general liability policy? We also have an example, if your insured's a moving and storage company, that they are moving the furniture around and moving the furniture around before it's placed where the owner of the property wants the furniture to be placed. You damage the floor or damage the wall. Is that auto or GL? Taking something off the truck and taking to a supermarket to deliver it to the cooler, and taking it from the truck on a hand truck to the supermarket. If you hurt somebody, is that auto or GL? The key part here is reading this. We exclude coverage on the auto policy before it is moved from the place where it's accepted by the insured. So what we're saying is, when our insured walks up to it and touches it, then the auto policy attaches. If what's sitting there falls down before our insured gets to, that is GL. It's also covered for a movement, and it's covered after. It's not covered anymore after it's moved from the covered auto to where it's finally delivered by the insured. In the cases I just gave you, the damage to the public by the horse is an auto loss because it's being unloaded and we did not get it to the barn. The example of hurting the floor or hurting the wall when we're moving the furniture because it's not where the owner of the property tells you want to end it up is still an auto loss. Covering the load of, and this actually happened, a load of beer taking it to the supermarket, and my insured ran over the foot of someone sitting down picking up a can of peas, and we did damage to her ankle, and she sued. Again, that's auto because we do not have the beer to the cooler. Once the horse gets into the barn and we fail to close the gate, or once the furniture is put in its final place and then for some reason it moves or it is set in the wrong place, or once we get the beer to the cooler or the soft drinks to the display and the display falls down, then that's no longer covered in auto because now it's after that incident is after it's been moved to this final destination. So now it got there, then that would be picked up under GL. Handling of property defines coverage for damage to the public, not damage to the cargo. Again, care, custody, control, protects for bodily property damage done during the loading and unloading of cargo from a covered auto. It defines coverage. It conforms with the GL coverage. The damage done during the completed loading and unloading operation, this is a completed operation, excludes before and after the move, but during the move is not excluded. Therefore, bodily property damage done covered under the auto form during movement of property to and from a covered auto from the first handling of the property to be moved into the property or until the property is to its final destination. Movement of property. We also exclude bodily property damage resulting from the movement of property by mechanical device other than a hand truck. What's a hand truck? Well, we see them attached on the front of a delivery truck. A hand truck can be a wheelbarrow. A hand truck can be a non-palletized pallet jack. A hand truck can be what you go into a hotel, and the hotel has the things you put your luggage on. Anytime that's been done, that is still auto. That is why when we unload the horse, we're guiding them by hand. When we unload that case of beer or that case of soft drinks, we're taking it on a hand truck, and that is still auto until it gets there. Mechanical device. We're talking about, we have seen delivery trucks of concrete blocks. We have seen conveyor belts in trucks, or we can see lift gates. Those kind of things, again, are attached to the vehicle, and if we're loading and unloading with those items, it's still auto. But what is not attached to the vehicle, in my opinion, are three types of items that can load or unload a vehicle: a forklift, a front-end loader, or a crane. In those cases, what you need to cover those exposure is a general liability policy addressing the usage of those items to load and unload. Again, mobile equipment or items to load and unload would be a crane, a forklift, or a front-end loader. Even if your insured is taking that forklift with them that's motorized, we've seen them hanging on the back of a flatbed truck. Getting them to the location, if the forklift falls off of that truck, that is an auto loss. But getting to a location to unload the flatbed is not an auto loss. It is a general liability loss because of the item that's unloading it is a mechanical device, and once we take it off the back of the truck, it's no longer attached to the truck, so therefore it's not covered under the auto policy. And as I said before, all these items are covered under the general liability that's not covered here. That again is why it's so important for the insured to have an auto policy and a general liability policy, hopefully with the same carrier, so the question of coverage would not come up. The only question you would have is what loss line is going to be charged to and what premium is being charged. Again, why is it important what loss line? You'll see the auto policy, there is no aggregate. The general liability policy, there is an aggregate, so there will be a concern about that. So limitations of the above: no coverage for damage done during the movement of property by mechanical device. Excludes does not apply if the device is attached to a covered auto. Again, a crane, a forklift, a lifting device on the vehicle itself. Excludes does not apply if movement by hand, anything that's not motorized. Exclusion only applies if the movement is by a device not attached to a covered auto, which is a crane, a forklift, or front-end loader. coverage for this bodily injury and property damage found under the general liability policy as we talked about. Exclusion 9, bodily injury property arising out of operation of certain equipment. Those are the equipment that we listed in the second session as mobile equipment. And what we find is that the forklifts, the cherry pickers, the pump out trucks, the items that now are licensed for the road that would be mobile equipment if not licensed on the road, the cranes, the farming equipment we talked about, the drill rigs that we talked about, what we find is those things have operational equipment. One of the two examples that we would use here, one fall under A and one fall under B. You know what a cherry picker is. A cherry picker is you've seen it often with light trucks where you have, or electrical supply trucks where you have the truck lift with a bucket where the worker stands in it and it raises and lowers the worker. In a crane situation, you all can visually those where you have a crane with a lifting device and the crane moves from point A to point B. So what this exclusion says, again, what's excluded here is covered under GL. What it says here is that when you take that cherry picker from point A to point B, when you move it from a yard to the light post to be worked on and you run into somebody, that's an auto claim. But once you get to it, you put the outriggers down, you stabilize it, and now you raise the worker, and if the worker then drops the light bulbs they're installing down and it hits the patron, that becomes a GL claim. If you take the crane from point A to point B, getting from the shop, from the location to the job site is an auto claim if they run into somebody. But at the job site, when they set the outriggers down to stabilize the crane, now they're lifting the truss, and as they lift the truss, if those truss falls and hurts somebody, that is general liability. Again, very important to have auto and general liability with the same carrier, so there's no questions about coverage. There's just a question of what loss line to charge the claim to. So, bodily injury, property damage done during operation of equipment of defined auto with the following equipment type that we talked. The items listed in 6B and C or any other. The GL coverage covers the operation of the equipment. The business auto policy covers the road exposure of the equipment. Complete operation, same thing here. Once we get the horse into the barn, once we get the furniture delivered, once we get the beer delivered into the cooler, then the auto policy no longer covers that. The general liability policy picks that up. So we exclude bodily injury, property damage arising out of your work after that work has been completed or abandoned. This exclusion, your work means work or operation performed by you, again, delivering things, and also if you had the material and those things. So again, that's covered under GL. Your work including warranties or representations. These are other kind of things that would be involved in here that we would not what would define as end of it. So definition of coverage, again, auto and GL. Complete operation conforms with or mirrors the GL coverage. Movement complete, no more coverage under the business auto. The coverage is in the GL. So liability form covers all operations not excluded or active. This is general liability form. The general liability exclusion G includes the operation of autos owned, leased, rented, or borrowed, and insurance operation including loading and unloading. So loading and unloading are not covered, and the definition of loading and unloading mirrors the exclusion 789. Loading and unloading, the GL policy says after it's moved, where the auto policy says before it is moved to its from its place where it's originated, and under C, while it's being moved from the loading and unloading does not cover while it's being moved to its final destination, where the auto policy covers it until it moves to its final destination. So those are how the two policies work together. So auto form, again, showing you just where the auto form says before, the general liability form under the definition of loading and unloading says after. where the auto policy says after, the general liability policy says before, and then conforms for the hand truck and attached equipment, just to point out where those definitions are. So loading a covered auto by hand equipment attached to covered auto or hand truck, damage done not to the item that's in care, custody, control. You still need a cargo policy. An auto form from the first accepted by the insured until the final delivery. After the delivery or before the movement starts, then that is general liability. We do not include war. There is a 11th exclusion, and I did not list it here. It was listed in the first section, or the second section we did, and that is the pollution exclusion. For you who don't remember that, the pollution exclusion said we do not cover bodily injury or property damage if the item that did the damage, the pollutant that did the damage, is the insured's cargo. And so that is excluded for bodily injury, property damage. Again, that was addressed during the second hour in addressing the pollution coverage there, and that buyback was CA 9948 that again is available in the marketplace. We just reviewed that a few minutes ago. So that is the exclusion, the exclusion 11 that we do not have here. Exclusion 12, we don't cover bodily injury, property damage arising out directly or indirectly out of war, including declared war, warlike actions, insurrections, and those kind of things. We have a war exclusion in the policy mainly because of the demand of the London market, where they have a rule that says unless there is a war exclusion, we will not provide reinsurance for those particular programs. Again, war is not that big of a concern that we have here. Insurrections and those things, if you remember some of the cases we have, there's a lot of dispute where you have the 9/11 attack or you have the California riots after the King meeting. Did they declare that as insurrection or rebellion? Clearly we never do that, or try not to ever do that, because that would exclude coverage under our policies, and therefore this is why the war exclusion is in there. Racing, we don't cover auto while used in professional organized racing or demolition contests or stunning activities, or while practicing for contests or activities. This exclusion also does not apply while the covered auto is being prepared for use of racing. There would be rarely that your insured would have a race car if your insured is not an auto dealer or an auto service risk. If your insured is an auto dealer, the same exclusion is in the auto dealer coverage form, which is new, or the old garage policy. If you're an auto service risk, then you would have a business auto policy, and this would also be there. The key element here is that you do not want to, you want to find out if your insured has anything to do with racing other than their decal on the side of the car. If they handle the car, if they deal with the car, if they own the car, if they do service work on the car, there's no coverage under the auto liability forms, the garage liability form, or the auto dealer coverage form. And so you would want to address that with a specialty carriers, and there are specialty carriers who address coverages for racing. However, there is a note here that it's organized racing. It's not one of your drivers in their 18-wheelers challenging the Corvette next to them and says, I can beat you to the stoplight. That is covered. It's only an organized racing or demolition or stunning activities, not just two airheads on the side of the road challenging each other from a macho standpoint and creating a race between the two. But also it goes, as we say here, preparing for it, owning it, whatever activity. So you need to be concerned about possible that. So war, no coverage insured contracts. For racing, no coverage for covered autos, even any auto, if used in racing activity. This was first found in the December 1993 coverage forms. It's always been found in the garage policy. They brought it forward into the auto policy in that time. Limits of insurance. This is a occurrence limit form. Regardless of the number of covered autos, insurance premium paid, claims made, or vehicles involved in the accident, the most will pay for a total of all damages and covered collision cost expense combined resulting from any one accident is the limit of liability for the auto liability coverage shown in the declaration. All bodily injury, property damage, and covered expense resulting from the continuous repeating exposure to substantially the same conditions will be considered resulting from one accident. No one will be entitled to receive duplicate payments for the same element of loss under this coverage form and any medical payment coverage endorsement, uninsured motorist coverage form, or uninsured motorist coverage form attached to this coverage policy. We'll talk about those coverages in the last 4 hours. But basically what this recognizes is two important parts. It could be very typical where you would have one insured having more than one auto involved in an accident. Clearly in the areas that the motor carriers deal with, where we have tractor trailers, where you have a tractor that's a covered auto in the policy, you have a trailer that's covered auto in the policy, and they do damage to someone. That is one accident. You do not have, even though you have two covered autos, you only have one accident because they, one accident, and so one limit applied to that. Often there are more than one insured involved in the accident, meaning that you have the owner of the vehicle covered by the endorsement. Again, let's say it is the owner of the corporation. You have the C9947 endorsement, employee as additional insured on that policy, and therefore you have the coverage for that. You have the driver who's covered, and you have the corporation who owns the vehicle, or excuse me, corporation who's operating the vehicle is covered. So you have three insureds. Again, one accident, one limit. Same thing would happen if you have multi-claimants, one accident, one limit. The other part of this, though, that is important is that there is no aggregate. This is an occurrence policy, so no matter how many accidents you have, no matter how many claims you have the policy limit available for each claim. When we talk about the GL policy in the later sessions here, you'll find that that's not true in the GL policy. The GL policy has not only an occurrence, which we call accidents and auto policy, but an occurrence limit in the GL policy, but they also have an aggregate, which means you can use up coverage. This is why when we discuss the GL policy and auto policy working together, we discuss the loading and unloading, the use of the mobile equipment, what's an auto or not. When I talk about what loss line is charged to, the important part of that is that if it's an auto claim, you have not exhausted the limit, but if it's a GL claim, you could possibly exhaust the limit because of the aggregate. Each accident has full limits, no aggregate, but multi-insured or multi-covered vehicles do not increase the limits. It's just that simple. So we have the exclusion we went through. Exclusion to watch for and make sure there's coverage other than the auto liability form, contractual. Those are the harmless agreements. All contracts except the property damage and rental vehicle, railroad, and the trucking agreements involving owner-operators, involving use of government authority. The key component here is that that's broad form contractual. Adding someone as an additional insurer in the policy only addresses the persons you added as vicarious liability, makes them additional insured only when they're being held liable for the conduct of our insureds. If your insured signs a whole harmless agreement and with an indemnification agreement, then that would be honored under our coverage form, both auto and, by the way, GL and garage and auto coverage dealer form, because of the broad form wording in it. We do not cover injuries to employees. We want to cover that under work comp. We want to make sure that everybody who works for our insureds, who drives our vehicles for our insureds, are covered by work comp. And even if they're not in states like I mentioned or partners like I mentioned who do not have mandatory work comp, if those people get injured, they can still sue, and there is no coverage. There's no coverage under the auto liability and as well as the general liability for those injuries because they're still employees. We want to exclusion 6 is carrier control. You need to cover our insureds with an auto, with a cargo policy if it's own property or possibly an extension to the commercial package policy that extends property by being their own property while being transported away from their premises. You want to cover the for-hire trucker, cover them a cargo policy to buy back this exclusion. You would also want to address the coverage where you have the the rental vehicles in the insured's possession that would be covered under hired car physical damage, and or in the case that we'll talk about the next session, garage keeper's liability. For pollution, there's no coverage if the pollution is done by cargo. This is the bodily injury and property damage covered because of done the direct damage. We talked about that in the second hour. So and then we talk about the auto and G altogether. So who's the policy going to protect? The U on the deck sheet, only while operating a covered auto. Covered auto, you have to do the symbols right. The U and the permissive user while driving a covered auto is covered no matter on insurance business or personal. That's why the personal insurance become a problem, because there's no limitation for their coverage, no requirement for that vehicle to be used in business. It's covered all the time as long as it is a covered auto, but not the owners of those vehicles, even if they're listed on the policy, even if it's owned by the same owner of the corporation. That's why we have to add those endorsements, or not the employees for the employees' personally owned vehicles. We do give coverage back to customers and owners of the legal liability under the vicarious warranty. That's our session here we have today. We hope that this is beneficial to you. If you have any questions about it, please contact us at this. Again, if you have other people in your organization who can benefit from these CE seminars or webinars and they have not participated in it yet, these all will be repeated on May the 6th. You all have a good day. We appreciate your time and your support of our program. I'm done.